Okay, we're going to go ahead and get started. Just a few housekeeping items. We're covering information today on construction loans. We appreciate you joining us. My name is Jennifer Young, and I'm with University Credit Union. And joining me today is Marky Johnson. She's one of our mortgage loan officers. And we're going to be covering this information on construction loans. During the process of the webinar, you're welcome to type in questions. If you look on your screen, you'll see an opportunity where you can type in questions. And we're happy to answer any of the questions related to the construction loans, along with any other questions that you may have on other mortgages. We have a full-service lending department, and so we want to make sure that if you have questions, we're happy to help you out through that process. But for this webinar, we're going to address specific construction questions. Now, when we talk about construction loans, we're talking about custom construction. There are a lot of questions that come up with people that are buying from major builders in town, like Edge Homes or Henry Walker or Destination, Garbett, those types of builders. And when you purchase a home from them, most of those builders provide the construction for you. You don't have to seek separate construction loans. And so you may be building a home with them, but you don't actually have to get the construction loan. And so for today, for our presentation today, we're talking about custom construction and what pertains specifically to that. So we're going to go ahead and get started. So construction loans, why, when, where, there's a bunch of different questions on that. Construction loans with the credit union, we offer two different types of construction loans. We offer a one-time close and a two-time close. And that's when you're building a custom home. So if you find a piece of property, you find a builder, and you have a set of plans that you really want to see to come to fruition, that's what type of a construction loan we work with specifically. And we're going to go into detail over the next little bit on both types, one-time and two-time close. So we're going to go ahead and proceed with one-time.
Okay, so with the one-time close construction loan, you're going to close on the construction and long-term financing prior to starting construction. So you're going to close on everything all at one time, and then when the home is done, we will roll your construction loan into the long-term loan. You won't need to sign a whole closing package again. You'll need to sign just a couple of documents, but it's a really streamlined process. You'll lock your long-term interest rate up front when we do the financing, so that'll be locked before you start construction, and then you'll only pay closing costs one time.
On the two-time close, you actually will close two separate times. So the first one will be on the construction loan itself. You'll close prior to starting construction. We'll go through, we'll do all the paperwork, and then you'll close on the construction loan. And then once the home is 100% complete, you'll close on the long-term loan. So the long-term interest rate on this, you wouldn't actually lock that in until the home is about 30 days from being complete and that you're ready to close on it. And with the credit union, we actually give you a 0.5% credit towards those long-term closing costs. So 0.5% of whatever your loan amount is, we would give you a credit back to cover some of those costs.
Okay, so now we'll go over some of the details related to these construction loans. The interest rate is very low during the time of construction. Right now, the rate is as low as 4.24%, and you'll need to make interest-only payments during the time of construction, so your minimum payments will remain relatively low, which is nice, especially if you already own a home and you're upgrading. Those payments will stay really low. We offer a few different build terms. We can do 6, 9, or 12 months. We can lend up to 95% of what it's going to cost to build the home, and we can do loan amounts up to $2.5 million. Some restrictions apply, so get in touch with us to see exactly what down payment requirement would apply to you depending on how much you're looking to borrow. And we can do construction loans on primary residence as well as second homes.
So we've gone over one-time and two-time close, and this just gives you an example side by side of the differences. So again, on the one-time close, you're going to close one time. At the end of the construction, you actually will have to sign a few more documents just doing the modification over to where you're going to be making your total monthly payments onto the long-term loan. The interest rate on that is locked up front, so you don't have to worry through the course of construction. That interest rate is locked. Loan amounts are restricted to your county loan limits. Now, just to answer some of the questions that may come up on that, county loan limits, just to give you an idea, Salt Lake County is $600,300. Tooele is the same, $600,000, $300,000. Davis is $424,100, and Summit actually allows you to go a little bit higher. Summit is $636,150. So two-time close, again, twice. You close 2 times, once on the construction loan, once on the long-term. The long-term rate would not be locked until about 30 days prior to the home being complete and you're ready to close on it. Your loan amounts can actually exceed the county loan limits. So if you're looking at a home in Salt Lake and you're looking at needing somewhere $700,000 or $800,000, then the two-time close is where it would work best for you. The loan amounts can exceed the county limits again and upwards of $2.5 million. And then we actually do want to look at deals over $2.5 million, but we would refer them into our commercial lending department. So if you find yourself in that category, we would refer you over and work with our commercial lending to help accommodate that request. So we want to give you an idea of what the process is for the construction loan itself, go through some of the steps and cover some of the information that will be collected.
So we do require you to have a general contractor. Even if you are currently licensed, we would require you to hire a separate general contractor for the project.
We require the same documentation that we would require on a regular mortgage. We ask for the same information on a construction loan. Additionally, we'll ask for that same kind of information from your builder. So we're going to ask them not only for financial information, but we're also going to ask them for their license, their insurance information. We're going to make sure that there's a contract that's between you and the builder that addresses the details of construction and the cost. It also would address the finishes. We'll also ask them to provide us with a cost breakdown and a set of plans so that we really have a good feel for the quality that you're looking at building in this home. We also check with the state construction registry to make sure that they're in good standing and that everything is clear and good to go with the builder.
Now, once we gather all of the documentation from you and your builder, we will send your file to our underwriter, who will issue a preliminary loan approval. They'll go through the file and see if we're missing anything, and then they'll let us know what conditions there are, and we'll start collecting anything additional that the underwriter wants to see.
At that point, once we have the information started, we'll go ahead and order the appraisal and title. Now, the appraisal is ordered subject to completion. And again, this is why we need a set of plans and a complete cost breakdown indicating what the finishes will be in the home so that we can get a really good, complete appraisal on the property. Once that information is completed, then it moves on to the next step, which is
your final loan approval. So once we have the appraisal, the title work, all of the documentation that the underwriter has requested, they'll review your file one more time and issue a final loan approval. At that point, we're ready to send your file over to our closing department.
So once you're ready to close, that's when you'll visit the title company and sign all your final documents. And at this point in the transaction, that's when the final down payment and the final transaction with the money. You'll need to come in at that point with the rest of the down payment, cover your closing costs. All of that will be finalized with the title company. And once all of that is done, the title company finishes up by going out, inspecting the property, and gives us the good to go. That's when construction starts.
So now that you've signed everything and your loan has funded, your builder will start to submit draws. So they'll request to draw from that construction loan for the supplies needed to build your new home. The draws are handled by our loan administration department, and we'll introduce your builder to them prior to closing so that they can get going on everything as soon as your loan funds.
So once everything is finished on the home is 100% complete, you have a certificate of occupancy from the city, then we're ready to go ahead and convert it over to the long-term loan. Now you have two options. If you've done a one-time close, then you'll just sign a few papers that convert it over to the formal long-term loan and start making your payments. If it's a two-time close, then you'll sign all new documents, for the long-term loan at this point, and then your payments start.
Okay, so now we'll go over some do's and don'ts to follow throughout this process. So do check with your mortgage consultant before making any changes. And by any changes, we mean any changes to your credit, any changes to income or jobs, any changes to your plans for the home. These can affect your final approval when the home is complete. It can affect a lot of things, so do check with us prior to making any changes. You'll also want to keep in touch with your builder during the process. They can keep you up to date where they're at, answer any questions that you have, and then they'll be able to give you an idea of when the home is nearing completion so that we know when to start the process of your long-term financing. And do contact us with any questions that you have throughout the process. It is a long and stressful and exciting process, so feel free to keep in touch with us and call us with any questions, and we'll hold your hand throughout the whole process.
Okay, some don'ts. Don't begin any kind of construction on the property prior to your construction loan being recorded and in place. It's really important to understand that nothing can happen on the land prior to the construction loan being recorded. There are a lot of other side things that go into that, and we'd be happy to discuss details, but it's really important to understand the contractor don't start anything, don't dump dirt, don't go out and start digging. It's really important that nothing happens before you start construction or before you start your construction loan. No new debt. Don't get any new debt or don't change your debt structure during the course of construction. There are a lot of times that we run into situations where borrowers will go ahead and go to Home Depot, and Home Depot offers them a discount if they open an account and put their products or their supplies on their account. We want to make sure that you understand and have a clear picture that we need things to stay the same as they were when you first applied. So no new debt, no change in your income, no change in your credit. And then if you do have things that come up during the process, if you do have a situation where there may be a change to your income or that you do need to get something, new credit or something, check with us. Let us help you through the process, and let us help you so that nothing affects your ability to qualify for that long-term loan. We want to make sure that everything is set to go when you start and it stays that way through construction. Likewise, on the house, if things change with the house, if you decide that you want to make some changes on the house or either change it for an upgrade or even change it from the initial plan, let us know so that we can get the appraiser involved and give you full credit for the actual changes that are being done. Whether it's changes that were planned or unexpected, we need to be involved with the process as much as we possibly can. So don't forget to involve us in those. So we've covered a lot of information on construction loans. We've kind of flown through this pretty quick, but we're open to answer any kind of questions on it. I'm going to ask Marky if she'll cover. We do offer lot loans additionally, and so I'm going to ask her to just answer some quick questions on lot loans really quick.
Yeah, so sometimes you may find a piece of land that you want to purchase before you have plans in place and a builder in place, and before you're ready for a construction loan. So we do have a product to help you purchase that land. It's called a lot loan. We require at least 30% down on the lot, and what you use for your down payment on the lot can be used towards equity in the down payment that you need on your construction loan. How our lot loans work, the payments are amortized, so they're calculated over 15 years, but the full amount is due within 2 years. So you'll want to start building on the lot within 2 years. And then when you take out your construction loan, your first draw would be to pay off that lot loan, and we would just combine it into one loan. But that is a way that you can buy that piece of property before you have plans and a builder in place.
Okay, thanks. One of the questions, and again, I'm going to encourage you, if you do have questions, go ahead and type those in, and we'll spend a little bit of time answering questions. One of the questions that we had earlier was, do construction loans work for renovation or remodel type projects? And the answer is yes. We would love to help you through that. If you're doing a major remodel, a lot of time, we do a lot of those, mainly if people are going to be doing a complete update or a gut and remodel, we will work with you on that. That's what a construction loan is perfect for. So yes, we do those.
A lot of people have concerns. What if my cost runs over? What if I have this budget in mind and then we make upgrades and we spend more than we should have? What happens? So the credit union does try to protect this and anticipate that happening. It happens a lot with new construction or remodels, so we do require a 5% contingency in your cost breakdown that you'll put together with your builder. So we anticipate for a 5% overrun. If you run over that 5%, then you would need to have the means to cover that when the home is complete.
Okay, so those were good questions. Is there any other questions? So we have another question. Can you get a loan that, let's see, that has a home on it and that you want to knock down? Yes, that actually falls into the category of kind of a renovation / construction. We refer to them as renovation, but yes, you can. The same requirements are in place for that. If you buy this piece of property and you really have the value of the properties in the land itself that you want to knock the home down, then you just have to take that into consideration with the overall investment. So in other words, if you buy a home, a piece of property, and the home and the property together are $250,000, and then you are going to build and maybe spend another $750,000, so you've got $1 million into it. As long as you have in that situation a 20% investment overall, then we'll work with you on that. You just have to take that into consideration when you're looking at the piece of property. If you're going to be knocking the home down, it would be more of a demolition type expense to you. It's a good question. So do you want to take, let's see. Question is, I already have a lot loan that has 6 acres. Okay, sorry, a lot loan that has 6 acres. We were wanting to build on 1 acre and sell the rest. Would the other 3 acres be stuck in with a lot? Okay, you know what? I know what you're talking about. And so here's what you have to consider. When you have a piece of property that is that big, you would actually have to subdivide the property before the construction loans. So you would have to have those parcels broken apart and defined before you started the construction process on the single home that you're talking about. So you would need to go either to your company that has done the lot loan and talk to them about what you want to do, talk to them about the fact that you want to divide it out and that you're looking at dividing it out and selling off a parcel and then building on the parcel, and work with them to get part of it released and structure it that way. Yes, we can work with you, but you just have to make sure that everything is separated and that the parcel that we're working with is defined. Sometimes it takes getting involved with the city and making sure and realigning the ownership lines or the property lines. So, but yes, you can do that. It's just a little bit more of a process. It's a good question. One of the questions that we had earlier was credit scores. What's the minimum credit score that we would work with? And we will go down as far as 640 on a FICO score. Now, that being said, the higher your credit score, the better you're looking at as far as rates. The biggest impact of your interest rate is based off of your FICO score and the down payment. Those are the 2 biggest determiners. So FICO scores credit scores are very important.
Okay, we have another question. Do you only work with loans in Utah? Yes, we only lend in the state of Utah.
Dang it.
Yeah.
We wish we went outside of Utah,
Yeah.
but for now, we're only given the go-ahead for Utah. So that's a good question.
What is the interest rate if your credit is over 750? So right now, the interest rate on our construction loans is 4.24%. As far as the long-term interest rates, you could contact us directly and we can get you some more information on that. Those vary all the time, so get with us and we can get you information on current rates, but construction is 4.24 right now.
So one of the questions that we had was, do we only work with a builder that's on our approved builder list? And the answer is no. We will work with whomever you would like to work with, but just know that we require them to provide us the information very similar to what we require from you. We'll require financials and license and what I covered before, insurance, and make sure they're in good standing with the SCR. We'll go through and make sure that and underwrite them the same as we do you, but we don't have a set aside list that we only work with. We'll work with whoever you would prefer.
Another question is, how long will it take to put the construction financing in place? And that's a great question. You definitely want to start planning a little bit before you want to start building. Once we have all the information that we need, so documentation that we require from you and from your builder, it takes about 4 weeks or so to get the approval process done and to get the appraisal and title work complete. So you definitely want to start planning so that you don't come to us and say, I want to start next week. You know, plan on about a month, 4 to 5 weeks for us to be able to get everything done for you.
Okay, so those are some really great questions. We're going to wait for just a minute more, and if there's any other questions, we'd love to help. Just before we go through that, I just want to make sure I know you know how to contact us. You're with us with the webinar, so you know where our website is. But this is the main contact number. As you see on the screen, the mortgage department, 801-481-8840. That number rings directly on the desk of each of our mortgage loan officers. And so when you dial that, you'll dial directly in and get us. So if you do have questions, reach out and we'll help you with anything you've got a question on. Okay, any other questions? Okay, it doesn't look like we have any other questions coming in, so I'm just going to let you know, thank you so much. We so appreciate you attending today. We appreciate the opportunity to discuss construction loans with you. We love working with construction loans. And so if you do have questions, we look forward to helping you and look forward to talking to you. Now we've got one more. What if you did get a different job during building? You know what? We get that from time to time. We do run into that. As long as it's the same line of work and as long as there isn't a vast change, but I would say before you make any changes, you just need to reach out to your mortgage loan officer. You need to make sure and talk with them, make sure it's not going to affect your qualifying for the long-term loan. If it's the same line of work and you're doing an improvement in your position, then I would say you're okay. Some companies have probationary periods, and it's really difficult for us to get approvals if you're in a probationary period. Investors don't want to do a loan with somebody that's during income that's in a probationary period. And so that's the biggest determining factor, and then qualifying. So just reach out to us. If you are going to be getting a different job, just reach out to us and let us know ahead of time. So another question came in, are we able to discuss HELOCs? We can give you a little bit of information on HELOCs. So a home equity line of credit is what HELOC stands for. We refer to it as HELOCs. It's just a little bit easier. The home equity lines with the credit union will actually go up to 100% of the value of the property. They are based on a variable rate, so it's prime plus, depending on what your terms are, depending on if you're high loan to value or lower loan to value and what your credit scores are. The best ones to reach out to on the HELOCs are actually in the independent branches. The branch managers can help you and discuss the terms and details on a HELOC. But if you do have questions, reach out to us and we'll get you in touch with a branch manager that can help address those questions. Okay, we'll wait for just probably another 30 seconds to a minute and see if there's any additional questions. But again, thank you so much for attending and sharing your questions and interest in construction loans. Okay, it doesn't look like we've got any more questions, so thanks again, we appreciate it, and we're going to say goodbye.